Hey everybody, good afternoon. Doc Severson here with 12-minute trading. Today is Monday, the 10th of February. I'm joined here with Dave Lukas of 12-minute trading as well too. And we're going to spend the next 30 minutes or thereabouts talking about the markets and what we see going on in the markets with you guys. So we have futures are up today in all markets that we follow. So we have the NASDAQ appears to be leading things to the upside right now, fairly strong. It's been a very persistent move, so we don't expect this to give anything back at the end of the day or dump at the end of the day, but anything could happen, right? So,
Yeah, isn't Trump supposed to sign some executive orders coming up here around now or something like that?
oh
So
yeah, it's yeah, he's overdue for that. So
I actually think he is scheduled to sign some today, but maybe that's getting rid of the paper straws. So I think we're all good with that. So, but yeah. So but I did think that steel tariffs were supposed to go into effect today. That doesn't seem to have affected things very much. So right now, it looks like you and I were talking about this. It looks like the market has kind of come to grips with the new world of Trump and what that's like and the speed and pace of it. But I also think the market's kind of, learned that when tariffs or these things are put forth, they are truly seeming like they are a negotiation item and something that they're not the end all be all. And we'll probably reach a point where something is an end all be all because somebody won't budge and it'll stay on. That's fine, but for the most part, I think what we're seeing is that the markets are starting to really understand the new world and are starting to focus on the future. And today's a good day. But we still been in this range. When you show the charts, we can show that. But we still been in this range where like we kind of go up to this like on the S&P like the 6,100 level and then get smacked back down and then we go down to like the 6,000 level and we get support and go back up. So we're kind of looking for that range to break still. We've been talking about for I don't know what 3 weeks now. We've got really really highly charged weekly chart energy, which is the second largest time frame, right? And so we've been kind of waiting for that to release. It's starting to curve over a little bit, right? But we got to kind of break out of the range either way. It can still go either way. So we're just kind of watching that, waiting for it. In the meantime, having a lot of fun selling iron condors and taking advantage of it. But that time will come, that it will end because we're going to get a trend. And it's probably sooner than later. This is a big week for news. Maybe the catalyst is this week with like CPI or Powell or something like that.
one of the things that I think that we all need to acknowledge is the fact that I think there's a lot of fear right now. There's a lot of uncertainty. There's no doubt of that. But there's a lot of fear that's out there in the market, and we are inches away from the all-time highs.
I know.
And so you're like, what is going on here? And I think the fact is that for the past 3 weeks we've had these either Friday or Monday dumps, and then
Mhm.
we spend the rest of the week like climbing back up out of the hole,
Digesting it. Yeah.
and then somebody comes along and smacks you back down in the hole again, and you got to climb back out of it. And so we had we had our Friday dump already because of the tariffs, and then today we're climbing back out of the hole. And it's like
Mhm.
this market is persistent. The dip is being bought every single time. So
Yep.
if you look at this versus where we had in 2022, which is our most recent, honorary bear market,
Yep.
when we got knocked off the perch at the very beginning of the year, the price did not recover. It just kept on tumbling and tumbling. The initial move was down about 15%, and then it sort of
Hmm.
climbed back up again and gave everybody hope, and then bam. But we have not seen the same type of price action. So unless we're going to go into some type of a sideways bear, which is a la 2016, we had that for months at a time. We
Hmm.
actually had a sideways bear market, which can do the same thing as a vertical bear market. It just in the consolidation happens in terms of time instead of vertical displacement to the downside.
Right. It's just a big range with huge swings, but you ultimately go. Actually, a great example of that for like 2 years, that was the Russell index. Like, it was just massive, wide range of several hundred points, and it literally could not go below or above it. And it would have these wild swings up and down. but it didn't go anywhere for a couple of years even. So that's a good example of that.
Yeah, you could see like in 22 and 23, it really just didn't go anywhere. And the entire year of 21, where the rest of the market was ripping, it did not go anywhere at
It
all.
went nowhere.
Yeah,
These
so
these big swings up and down.
this is a great big rounded base. So it's setting up the handle. This is a cup with handle pattern. We're setting up
Hmm.
the handle in between 2200 and 2400 or thereabouts. So this should be a good move once it eventually goes.
Yeah, I think the Russell ultimately, if tax cuts come in the way they're supposed to, and a few of the other things that are happening out there come to fruition, I think the Russell is poised to do really well. It has a lot of catching up to do to the rest of the markets. And I think that could be the sleeper when it comes to like indexes, out there to look at for sure.
Yeah, there's a huge amount of potential in the Russell. And again, I mean, the reason why we have not seen the Russell move is because of most of these
Interest
small
rates.
companies are tied to their finance through debt and interest rates.
Yep.
So that's why they haven't been moving like with the rest of the market. But if we get into a condition where the rate structure and the term structure is solid and stable, which of course is certainty, that we
Mhm.
might see what you're talking about where the Russell takes off and leads the market again.
If the Fed does cut rates, that helps the Russell. So every time you'll notice the Russell is extremely sensitive around rate and inflation data. So watch like this week, CPI is going to move the Russell up or down. The Fed decision, when they have their meetings, that the Russell really moves with that because it is so sensitive to it. But if the 10-year continues to go lower, and the 10-year has been dropping, and the 10-year has been dropping because of Doge, honestly, of those efforts of cost cutting in the government. Now, again, we're seeing now lawsuits and saying they can't cut and all this stuff now, and they have to keep funding going and all these things. So it's got to come to fruition. But the 10-year in the bond market is looking at that going, wow, there is potentially real serious cuts to spending that can be made here, and cut out this waste or this abuse and this fraud and be able to maybe run a better ship. And that brings rates down because that means that you don't have the debt climbing like it's been climbing and stuff like that, right? So the 10-year definitely has that piece of it. And if the Fed itself cuts the short-term rates, again, it's helpful for all the markets, but it's especially helpful for the Russell stocks too.
Well, it seems like the dollar has maintained its strength since the election.
Hmm.
So that's, I mean, we don't want the dollar ripping to the upside then because that will make trade, you know, that will kind of
That
torpedo all the tariff work that we're trying to do.
Yeah. And it also hurts multinationals.
Yeah.
So you'll see the bigger players, the Microsofts of the world and stuff, get beat up when the dollar goes skyrocketing higher. But a steady dollar, obviously, we want that. That would be good. Not too hot, not too cold.
Yeah, we are always after the Goldilocks. So let's see, Dave. I'm just going to go through the SPX here for
Yeah,
you, and if you want to narrate along or anything like that. So we've
sure.
got the monthly, weekly, and the daily chart here. Now, the interesting thing is I'm always looking for patterns, and this pattern that we had back here during kind of the summer and then into the fall, this is a cup with handle. And so here's our measured move target for that cup with handle, which is 6,200. So we're almost there. And actually, we've already been through a much larger one
Hmm.
back here, and we already hit that target long time ago. So we keep hitting these patterns and these measured moves to the upside. So this as well will drive. This is a rounded base. This entire thing
Hmm.
here is a rounded base, and then we are going to do the same thing with that and take the measured move target to the upside. You'll notice that they do get smaller. They keep getting smaller, and
And
so
that is typically what you see as you're getting
right.
towards the end of a larger, bull run.
Right, a cyclical, so not a secular. Secular is a very long term thing.
Yeah.
We've been in a secular bull really since 2009. The March of 2009 has been the same secular bull. But we have these cyclical bulls, and you're absolutely 100% right. Like what the cyclical bull will finish up when everybody is on board, when everybody is like, "Woohoo! It's party
Guys,
time!"
and most of the gains are made at the end of these things, guys. If
Oh
we get a
yeah,
parabolic, just nonstop to the upside, nobody can lose type market. That is your signal. Take advantage, but also your signal to, hey, tighten up your stops, be careful, get ready, get a good set of gains out of it, and everything. Don't be too greedy because when that turns, it's gonna be it's you get the nasty correction from it.
something that we might end up doing. We might end up doing some work with you folks here is uh, long replacement strategies.
Yeah.
So if you're holding some shares or anything like that, the biggest issue that you run into with a bear is they are so brutal to the downside. They come along so quickly that they take no prisoners. I mean, and so if you've got a long hold, you're holding these bags of something, and maybe you're sitting on some really good gains. Your goal should be to reduce that position into these moves. And the other thing, so you can reduce the position size by taking profits. Never take
Mhm.
profits on the way down if you can help it, right? You always want to be taking
Right.
profits on the way up. And the other thing that you can do is you can do stock substitution. So you can replace a long stock position with either what we call some people call them risk reversals, but we call it a modified synthetic long. So you're using options to create a modified stock position, which
Mhm.
is the only thing it really costs you is just margin.
Yep.
And there's ways that you can set up a very flat, no loss position for it, which is nice. At the same time, is that you can participate in the gains if you've got that
Yeah.
parabolic spike like Dave's talking about. The other thing that you can do is that you can replace stock shares with just long options. So buy
Yep.
something 6 months in advance in the money, and then
Yep.
treat that like stock shares, because the risk of that is basically what you pay for it. So you may spend something like $3,000 per 100 shares per position, but that's it. That's your risk, and then you can always
Mhm.
sell it on the way back down if things aren't going well.
If you had to. Yep.
Yeah.
Yeah. The other thing to watch, and you can bring up the chart on this, getting a little long in the tooth, but I don't know how it's going to react once it gets to true exhaustion is gold. Look at GLD. And you look at it on a daily and a weekly chart on this thing, and it's getting into exhaustion here, as you can see. But gold is breaking out, and it's been breaking out for it's really kind of gotten crazy lately. And part of that is there's some things going on. Like there's a lot of banks that are bringing gold back home. Like the London Exchange is out of physical gold to give to banks that wanted gold. And so there's a lot happening in the spot world. I'm not going to get into all this. You have to really understand how gold is priced and stuff and everything else. But the um, the spreads on like uh, what people are paying to get gold are really getting big. And like paying up for gold. And that's why you see like the GLD's been going pretty crazy lately. I've been playing that a lot actually. And done pretty good on it. But the I don't know. Like I think gold's definitely going over 3,000 an ounce, and a lot of this I think has to do with um, just fiat money. Number one, and number two, I do think that banks are maybe preparing for that future time when we do get that correction off the next parabolic move higher. I think that has something to do with it. Remember, they're going to move ahead of time. And also remember, bear markets don't like there's things that happen long before they show up. Things are like look really good then and continue to be really good. And Doc likes to use the kind of the term shot over the bow, that typically comes along. But I mean, like even like 2008, the seeds of it were sown in 2007. The shots over the bow were happening, right? But the market kept going pretty good into 2008 before it all fell apart. And so to me, it's just one of those things that I'm keeping an eye on. Like these banks are starting to stockpile gold. What are they preparing for? Why are they doing that? And it's just something to put on your radar. But right now, silver hasn't caught up yet. So something to think about too is maybe silver starts catching up to gold, and breaks out. So, Doc, I don't know if you want to talk a little bit about some of those, like even 2007 and 2008, some of those shots over the bow, just for people to think about, because maybe a year from now we're in a bear, right? We'll see what happens.
Well, here's a great question that just came in from Lexus. He's like, "Hey, during a bear market, is gold and Bitcoin also correlated with the stock market?" And then the answer is at first yes, because
Mhm.
here is 0708 right here in GLD, and it did have a bad couple of months in there, and this is because when everything starts to go down, all of a sudden you start getting margin calls, you get redemption
Mhm.
requests, you have to liquidate something right now and generate cash. And so you're going to generate cash by liquidating the most liquid asset that you've
And,
got, anything
and
and everything.
also, please remember, GLD, SLV, they are not real gold and silver. That is not really backed by real gold and silver. They're more like futures contracts and things
Right.
like that in how they're set up. So there's a lot of it's just like a stock. So to Doc's point, it's like I need money, I just liquidate things, so I sell the ETF, right? So it's different than physical
Yeah,
gold.
so people are not liquidating, they're not like showing up at the pawn shop and selling physical gold, doing something like
Right.
that. But to Lexus's question, yeah, there isn't always an initial reaction. Everything gets thrown out the window initially. But then what you'll notice is that gold became a leader, or at least in the GLD, became a leader
Mhm.
through some really turbulent times, and silver did the same thing as well too here. Now the thing I love is I was just talking about this a few minutes ago, but look at
Big cup
this
of handle.
enormous cup with handle that's set up, and that started from oh gosh, what was that, like 2011, and then it
Hmm.
took until it took until 2023. It took 12 years to set up this pattern, and it's breaking out, and it's going to hit its measure move target at 280 here before too long. And I myself am going to have some challenges here because it's like, how do I sell into strength at this? Because I've got
Yeah.
a relatively small position. I can't peel off more than, I've got 100 shares of this thing, which I got down here when we had this nice pattern here, breaking out of this pattern. I was like, okay, I'm in. So,
Well, and the other thing too, just going back to like what is happening with the gold market, some of it also is maybe anticipating a future QE a little bit too, coming back. There are some murmurs about the need that will be the need for QE, regardless of what the Fed says, in the coming, months, year, that sort of thing as well too. So that could be part of it as well. Again, fiat currency is going to continue to lose value. Even if we get our spending under control in the US, the central banking is all debt and it just compounds debt over time. And so I don't think people know this, but if all money that was in circulation, I'm sorry, all debts that are out there were paid back, there would be no money in circulation. Not one dime, not $1, nothing, because it's all debt. And so the um, dollar, the dollar's purchasing power will continue to erode over time, no matter what. And so you throw some QE on top of that, it just compounds it faster, right? So, could be another reason that, there's such a kind of a flight to gold right now.
yeah, let's see. See what else have we got going on here.
I want to see if
Now, you
I want to see how
mentioned,
today ends will be interesting because I don't know if there'll be any news that comes out, but this is a reversal of the pattern we've been seeing, right? We've been seeing markets sell off on Monday, right? for the last 3 weeks, then run up through the week, sell off on Friday. So now we're buying on Monday. And that was also with news of tariffs and with news of reciprocal tariffs and 25% tariffs going into effect on aluminum and steel and stuff. And so the market, again, has kind of shrugged that off. So to me, one of the things we've been watching is this, and you've got it up there. We got this bear, or sorry, bull flag on the weekly chart and the daily chart that we've been watching to break out. And that's why I think if you look at that weekly chart with that energy just starting to roll over a tiny, teeny, tiny bit, on that weekly chart. So I just we this could be the beginning of that move and that breakout from this finally.
I think today's rally is due to relief that the Kansas City Chiefs did not win the Super Bowl.
Yeah, everybody's happy that the Chiefs lost. That's what it is. Everybody's buying because of that. So no, I just again I think the market's getting used to it. I think the market's starting to look past the day to day and just looking again at the future and trading on the future and everything. And right now, obviously the market thinks it's decent today. If you look at especially what's moving, it's not just the Mag 7, it's the bulk of the market. In fact, Tesla's down today. Tesla's down another $7 today. It's been getting hammered. The
Look at this pattern. I mean, this is not a bearish pattern. This is what we keep saying. Like what makes this market difficult right now is that there's a lot of negative cross currents. There's a lot of uncertainty that's out there. This is a market which can't seem to break out. However, when it does this type of price movement like this is generally bullish overall. Now, it's not to say that we can't, set the hook like this, and that quite often happens where we go in the opposite direction that everybody expects. That was certainly the case back here in April, and you can see what happened from it, or August, excuse me. So, but this is not a bearish pattern. A bearish pattern looks like what it did at the beginning of 2022, where it's when in doubt, palms out, everybody out, one exit kind of thing. So question here, Dave, this might be a good one for you. What is your opinion on how countries will get out of debt? Would a market crash help?
The other countries really are stuck. It's the U.S. has some ability because of being the reserve currency, but I mean the way you get out of debt is you go bankrupt. I mean that's how you get out of debt, and we've seen that with countries before. And so that's how you ultimately get out of it, and it's different now, and that's why I've been saying like eventually the the system will collapse on itself. The monetary system is fueled by debt. It keeps compounding debt. At some point, it will collapse on itself. But it's like anything. It's going to fight to the death, for that. Every trick and every little, 2008 was a perfect example. Like QE had never been heard of before. And, all of that started. And now that's just like a normal thing. Well, the next thing's going to be something else and something else, just till it can't last anymore. And it'll eventually collapse on itself. Do I know when that is or how that'll be? Or, these things can take decades, right? And stuff. So, it's one of those things. There's nothing you or I can do about it, right? All we can do is just understand the laws of economics ultimately win, right? And so that will play out at some point. So it's pretty hard for, countries to get out of debt unless they significantly, and this is where the US is going, and Trump has to be really careful. Like, let's say that they can cut, I don't know, 3 trillion in spending after they go through all this with Doge and they get through all the courts and they're able to do it and they can cut 3 trillion. We're taking in 5 trillion. We were spending in 7. Now we're taking in 5 trillion. We're going to be fiscally disciplined and we're only going to spend 4 trillion. So we've got $1 trillion that we can apply towards the debt, right? And start paying it down, right? Now, if you believe that's going to happen, I would love to sell you a bridge in the middle of the ocean. But ultimately, if that were to happen, you could start paying down the debt and working it off. Here's the issue. Here's the issue that Trump has to watch, even with cutting $1 trillion or half $1 trillion, is and at the same time cutting a lot of government jobs too, right? Because it just floods people with unemployment, floods people without jobs and all that stuff too on the market. So you've got this issue where right now we've been spending $2 trillion more plus than what we've been taking in. And if you look at the actual numbers, our GDP, if you took that 2 trillion out, we would be negative. So we would be declining in GDP. So the only thing that's propped up the US over the last few years from a GDP standpoint has been the deficit debt spending. So basically all we've been doing is we've been going into debt. So we've been spending like, 800 billion to get 300 billion in growth is I think about what the ratio has been. So if you start to cut all that out, okay, guess what happens to your GDP? Because the only way your GDP goes up is with real productivity, right? You have to have real productivity in the marketplace from the workers and everything else. Now, Trump is smart, and that's why you see him like getting SoftBank to do 500 billion in data center spending, and Japan just to, said they're going to invest $1 trillion in the US. You have to rehome a lot of that productivity, right? Manufacturing, all that stuff. You got to bring a lot of that stuff back, which is why he's got a tax plan that's like wants to reward you if you do make your product here and all that stuff, because he understands that. But if you start cutting like crazy and you don't have a way to, like, you have to cut taxes at the same time, you have to get productivity up at the same time. It's a delicate balancing act because if you don't do it right, all of a sudden the US is in a recession. And then what happens? He gets blamed for being in a recession and it's, the worst president ever, all that stuff's going to happen to him. So he's got he's going to, I mean, like I said, it's just a real delicate balancing act. But if you can pull it off and you can really get productivity up, you can cut taxes at the same time, cut government spending, and have a way to start paying down the debt, you can at least stop the bleeding. Now, can we pay back 30 trillion in debt? Well, how many years will that take? Who's going to be in power? All that stuff. But maybe able to stop the bleeding some and be able to do that, right? So we'll have to see. But other countries have a lot more trouble doing that because they don't have the ability that like the US dollar does. They don't have the bond market that the United States does, the largest bond market in the world. And or countries have to hold bonds and US dollars because they have to buy oil, which is the lifeblood of everything. So kind of got them by the you-know-whats in that sense, right? And that's why you hear the BRICS trying to do their own thing. And that's where Trump's like, okay, BRICS, if you do your own thing, I'm going to come sanction you and beat you over the head and stuff so that you continue to use the dollar. Economics is the lever. It's not even war. It's not your military as much anymore. It's economics now. And that's one thing you're seeing from Trump. It's paradigm shift in the world. I think I said this a week or so ago. So I know that's a lot to go on, but hopefully that makes some sense. Um, so
Okay.
Yeah, Rob, I think that kind of answers that too. But
Yeah.
know this, to save the bond market, the Fed will crash the stock market every day of the week. Because if you crash the stock market, what happens? Everybody flights to safety. They all pile into bonds. What happens to bond rates? They go down. Guess what? We're paying less on our debt, right? Less interest because bond rates are down. So if the Fed is got the choice of crash the stock market or let the bond market and let the rates continue go skyrocketing higher, they will crash the stock market every day of the week. So
And they will. And they have. Okay. Any further questions here, guys? We're just about at the end of our time. So big week. So tomorrow we have Powell's testimony in front of the Senate Banking Committee. And then Wednesday morning, we have CPI, which is going to be the more important of the two. Then PPI on Thursday, and then retail sales. And then Friday might be a swivel chair day because we have a long weekend. So we will not be back here next Monday because it's President's Day. So I recommend you guys take the day off. Don't try to trade because trading the Globex futures on that is going to be pretty tough.
We always say free day of time burn. We did have one more question come in. It's actually a good question, Doc. I'll let you.
That's like a 30-minute answer to a question like that, Rob.
Maybe we save this the next time we're back. But how do you handle investing accounts versus trading during the bear markets? Well, we trade through the bear market, so it's just your trading strategies and tactics change.
What you're doing is, to give a 15-second answer, what you're doing is hopefully you have taken enough profits on the previous bull that you have lightened up at the top, which was my point at the beginning of this. session. And then what you're doing is on the bear, you're looking to reaccumulate, and you're also trading the swings. But
Yep.
yeah, it would take us at least half an hour to go through something like that.
We'll save that, but come back 2 weeks from now. Ask that question to us again, and we'll actually go on the charts and kind of give you some examples of how to do it.
Yeah, ask it at the very beginning of the session, not at the end, so
Yeah.
we can answer it.
Yeah.
All right, guys, thanks
Good
very
stuff,
much.
guys.
You guys have a great week out there. Make some money, and we'll see you in a couple of weeks. You guys take care.
Bye, guys.